Markets don't lie, but they whisper before they roar. Welcome to the weekly market digest from Investing Angles, where every candle speaks, every way reveals the future, and we chart the turn before the herd even blinks. Today's angles: volatility, ready to settle or just catching its breath. The dollar, another leg down or a bottom is sight. Bond yields and TLT, a warning hidden in plain sight. US indices, we cover them all. S&P 500 from multiple angles, Nasdaq and its double-edged structure, Dow Jones and Dow Jones Transportation, divergences or confirmations. Russell, does it still lead or is it lagging for a reason? A deep SP 500 breakdown. Sectors or large caps, technical shifts. Feature of the day: Apple. Another perfect hit into the 10 ring. We are growing fast. 13,000 plus subscribers and counting, and for good reason. Want a deep dive into global indices and FX pairs? Just say so in the comments. Don't miss our brutally tricky quizzes, and if you want daily setups before the news hits, join our private Discord, where Master Trader Kyle and the team are charting in real time. Smash that like, tap the bell, subscribe, and let's get into the waves. And as usual, we start with the Volatility Index. This is the closure on Friday. What we are seeing here: first of all, this is the 4-hour chart. This is a very concerning chart, and I would say that the last two candles are clearly bearish. They failed to close above this line that I indicated here, and there is a very good chance that we see a sharp reversal. However, if we look at the daily frame, daily is a bullish candle. However, there is a catch. It closed well above the Bollinger Bands. The same for the futures. If we look at the 2-day frame, the same story. Everything looks good. However, the index is overbought and the candles are above Bollinger Bands. Speaking about the weekly, well, that's a different story. It's still overbought and it's still above Bollinger Bands. However, in bigger picture, it might be just a continuation candle. Let's see what the next week brings. But at least at the beginning of the week, we are expecting a pullback. Now let's talk about the dollar. This is the closure, technically daily, weekly, monthly, and quarterly. So what we are seeing here, that while the monthly, for example, closed with a bearish topping candle, and it is a very interesting battleground right now. 3 white soldiers versus the tower top. I would say that 3 white soldiers has slightly better perspective, slightly better odds, and this is based on the quarterly and bigger frames, which are, by the way, bullish. So far, this is a neutral, slightly bearish candle on the quarterly chart, and if you look, this is a potential for a flag to complete. And I would be looking for a little lower low, maybe before we see a strong reversal. However, it's not necessary. So far, dollar is holding on a quarterly frame well above the strong support lines. On a daily frame, we have a technically bullish harami, and that could be the beginning of a way up. However, if we look at the weekly frame, there is still a chance, and this is, by the way, the falling 3 methods potentials. There is a good chance that dollar will go lower. However, I would say that it is getting very close to a bottom. Whether it will hit another one, another lower low, it's still a question. And if you look at our long-term chart, there is a possibility, 2 possibilities here. First is dollar completes this wave C for wave 4. I would put it here, wave C, or this wave that it forms here, and if it stops here, this could be wave 2 before it goes higher. So this is another opportunity here if it doesn't go below below the September low. Well, so far the trend is bullish, and we are expecting it to move higher, potentially towards the 113, 120 area. However, it will happen in the next couple of years. That's our expectations. Now let's have a look at the bond market and what bond yields and TLT are telling us. And we will start with the 10-year yield. This is the closure of the month and quarter, and let's start with the quarterly thing. For the first of all, this is a bullish closure. So technically, and it is aligned with other bigger yields like 20-year and 30-year. So all of them closed the quarter with a bullish closure. Technically, this is an incomplete dark cloud cover, which is often regarded as a bullish continuation candle. However, we might still see an attempt or two to move lower before the rally resumes. And if we look at the monthly frame, for example, this is potentially bullish flag, a big one, is being formed, and I'd like to emphasize that these circled crosses, they are bullish crosses. For example, like this 100 over 200 months golden cross, which happened in December 2024, and the previous one was recorded in October 1953. So this is huge, and this is one of the time event. Well, now let's have a look at the other one. So the weekly is bearish, and there is a good chance that we will see lower lows here. Speaking about the 2-day frame, and this is our call that we made earlier in March, saying that rates are expected to move lower, and this is our target. So far, it's in the middle of the target. They hit the middle, pulled back a little bit, but I am still expecting it to move lower. And the daily frame, if we look at it, it is right now bearish. It formed a hammer. However, it has better chances to continue lower. Let's see how it closes in the next week. As I already mentioned, the 20, 30, and 10-year yields are aligned, and this is the technically bearish candles, and we see a break below the 200 days moving average and the freshly made 50 by 100 days moving average crosses. So the perspectives for lower lows are significant at this point. However, the lower shadows could signify a bottom, and we might see as a reversal very soon. This is our long-term chart for 10-year yield. This was charted in December 2022. So far, the chart remains the same. This is how it looked then in December. We can see that yields completed wave 1, and now it's forming wave 2. It might take a while, and I already discussed it with our subscribers, that we might see some differences with this area in 1959, 1963. Potentially, this was the similar periods of the same rate, by the way. Now let's move on to TLT. Let's see what TLT is telling us. So first of all, I'd like to say that on the monthly frame, TLT had a chance, but it didn't confirm a bottom, and instead it formed a bearish ceramic candle. So now we are looking for a continued move down. I think that this green candle is just a final attempt before a bigger failure. However, if we look at the daily, 2-day and weekly frames, they are technically bullish and even closed above the necessary lines. However, I'd like to emphasize that the shadows, upper and lower, are somewhat unusually high, and this could lead to a potential reversal. And if we look at the daily frame, This is something special. This is five candles in a row, and 4 of them are bearish technically. Even though TLT was climbing higher, this is a highly unusual sequence for a healthy rally. And even though we have a 50 over 100 days moving average cross and the price moved above the 200 days moving average, it's still not as significant, and the build up of the candles. And I would like to say that TLT doesn't like to trade above Bollinger Bands. This is what happened before. We have 3 similar attempts to trade above the Bollinger Bands by TLT. One in March 2024, another in May 2024, and the final one was in August 2024. All of them led to very strong declines, and especially the first one in March. Let's see what happens tomorrow. I would say the chances for a TLT reversal are extremely high at this moment. Speaking about the Elliott waves, if we look at the wave that TLT is forming right now, it's absolutely concerning because, first of all, there's too many overlaps, and it probably explains why we are seeing the red candles where we're supposed to see the green ones. And this is a potential ending diagonal for wave C. And it's not only that. If it doesn't make a higher high and it doesn't make it to this purple rectangle, I would consider this wave as a truncation for an ABC correction, and this would be a double concern because we have a truncation plus an ending diagonal. So I would be looking for a brutal wave down, moving at least to the 89-88 area, which is the origin of this diagonal, and perhaps lower. This is the perspective for TLT and for the bond market. Now let's move on to the indices, and we will start with Nasdaq. This is the candle closure of the index on the quarterly and monthly frames. First of all, I'd like to say that quarterly formed a very strong bearish engulfing, and obviously after such candles, the move down is expected, and that's typical that we are seeing. The only thing that I didn't anticipate this to happen that fast. However, it is what it is. And the monthly closure was also very bearish, formed a tower top and confirmed multiple combos here, breaking below the important support line. On the weekly frame, several members argued that this 3 black crows that Nasdaq did back in February were nothing. Well, I wouldn't say so. These were one of the strongest candle formations I've seen in my life, and in general, this is the strongest ever for Nasdaq. So this is what we are seeing right now. I think this is just direct implications from this candle formations. Well, as we can see, Nasdaq already broken below 50 weeks moving average and the 100 weeks moving average. The daily is plain bearish, moving down. However, I'd like to say that on the daily frame, on the weekly, and a few hourly frame, Nasdaq is grossly oversold, and there is a very good chance that we see an immediate bounce starting next week. Now let's move on to the other charts. So this is the double top that we discussed way back in March 1st. Well, so this execution is fantastic. So now we are seeing that it made a double distance here, formed a flag, and completed the flag target, so just shy of the target that we indicated back then. Amazing structure, amazing call. Speaking about the Elliott waves, what we are seeing here, there are technically three possibilities, but very close to two. So what we are seeing potentially, let's start with the worst case scenario, the blue path. Considering this is a leading diagonal, 1, wave 2, wave 3 is now complete or about to complete. That would be wave 4 and wave 5, I would say maybe a little lower here. This is the worst case scenario. The best case scenario is that this is the first wave of a bigger correction, and either wave A in purple or wave C of A in red. So just slightly different semantics for the counts, but the idea is the same. Once we see this, we might be able to see wave B, something like this. For example, this would be, let me put another color. So this would be wave B of the second phase of the correction before starting wave C down. So that's the perspective for now for Nasdaq. And now let's move on to the next chart. This is the chart that we shared with our subscribers way back in January. Oh, I don't have a copy. And this is what Nasdaq is doing right now, falling towards these targets that we indicated back then. Speaking about the micro chart, Nasdaq possibly formed an ending diagonal on Friday. If this is the case, and there are some technical support for it, we might see an immediate and very sharp move upward, about 4.5% or even lower or even higher. The question is what kind of wave Nasdaq would produce, whether it's going to be a corrective wave or it's going to be an impulsive wave. That could be the main indicator for what comes next. And this is another chart that I left unchanged since December 15, 2024, when I said that this potentially ending diagonal is done. So it took Nasdaq almost 2 months to build a double top, and then we see a very nice move here towards the bottom, towards the end of towards the origin of the diagonal. But it's mostly informational. And the final one I'd like to discuss for Nasdaq is the technical call that we discussed with our members way back in March 2022, when we said Nasdaq is set for a decline towards 13K or maybe lower. And this is what is happening right now. The call was made based on the 15-day MACD bearish cross and some statistics around it. So this is the highest cross ever, and we were talking about the second and third largest crosses in 2022 and in year 2000, which respectively dropped the index by 37%, and it lasted, the bear market lasted 16 months. And in year 2000, it was an 85% drop lasting for 44 months. So right now it's the first largest, and it's 10% larger by magnitude than the second one. So that's our expectation at this point. However, it could be lower. Well, that's for Nasdaq, everything for Nasdaq. Now let's move on to the Dow Jones and Dow Jones Transportation Indices. Starting as usual with candles, what we are seeing here is a beautiful execution of a double top that we called in the middle of March. So now it reached the target, and something tells that it's gonna be lower, perhaps at double distance. This is the weekly frame, by the way, and so far it is bearish. As you can see, it broke through multiple lines, multiple support lines, including 50 and 100 weeks moving averages. The daily is also bearish, and the monthly closure was bearish. However, it wasn't as bearish as the other indices, by the way. But if we look at the quarterly, there are no questions asked here. A clear bearish engulfing of a spinning top with a very good chance to moving down in the next quarter or longer. Now let's have a look at the Elliott waves. This is the Elliott wave that we discussed back in January. And so far, and we said in January that Dow Jones has a very good chance to move down, and the 36,000 would be the minimum target. So far, it is getting closer, just a little bit, maybe 2,000, 2,300 away from the target that we discussed then 3 months ago. Now, let's move on and have a look at the smaller frames. This is the perspective right now. I think that this is an impulsive wave down. Dow Jones made 1, 2, 3, 4, 5, potentially in blue, and it is a very strong signal. Now we'll be looking for wave 2, possibly here, and it would be somewhat aligned with another perspective. Let's say this is the wave A, B, and C. Here for wave A of a bigger correction, we would be looking for a zigzag or for a flat. Here for wave B. There is also possibility for a triangle. That would be a nightmare scenario, but let's see what the index forms here. Another opportunity here is that wave 3, that Dow Jones potentially could form wave 1 here, wave 2, and now is working on wave 3. This is probably the worst case scenario, and it's still on the table. However, I'm seeing the probability for it as on the lower side. And the final chart is the Dow Jones Transportation Index. What we talked about with our subscribers on November 14th, when we identified this chart, this structure, and this target, dropping about 35% of the high at that time. And this is another one. Then we also shared with our subscribers saying that this is the final gentleman's exit on February 19th. Whoever listened, they should feel comfortable right now. Whoever don't, well, we can bring horse to the water, but we cannot make it drink. Now let's move to the next chapter of our discussion today, and this is Russell. Russell is bearish, no questions about it. It minimally formed a tower top on the 3 months on the quarterly frame. It formed a strong bearish continuation candle on the monthly frame. It is strongly bearish on the weekly and the daily. However, as I discussed for Nasdaq, Russell is also strongly oversold. So we are expecting a bounce or maybe even a midterm rally for the index. Let's move on and have a look at technical perspective. This is again the chart that we discussed with our subscribers back in the middle of March, saying that Russell formed, it was the first index to form a bearish MACD cross, and it confirmed at the end of March. And we were saying that then that chart, the index is set to fall to 1800, maybe 1400. Oh, if we look at the Friday's closure, it is already there. 1800 it is. And the cross is expanding and moving lower. And something tells that this might not be the end of it. Now let's have a look at Elliott wave charts. This is our, let's start with this one. This is the chart we've been tracking since when? Since November, end of November, we were saying, and this is our target. Target, by the way, remains unchanged. So Russell is approaching it very sharply, most likely forming an impulse. 1, 2, 3. We would be looking for wave 4 and potentially for wave 5. How deep it would be, we don't know this yet. We need to see a measure. This is the perspective at the smaller time frame. Potentially Russell formed an impulse already, as indicated here in red. 1, 2, 3, 4, 5. Would be looking for wave B after the impulse, potentially a zigzag as the most typical for wave 2 or B after this formation, and wave C sometimes in a couple of months. But some Fibonacci levels, ratios, and some technicals support the idea that this impulse might not be completed yet. So this is just wave 3 of the impulse, and we would be looking for wave 4 and wave 5, which would be only the first wave of the correction. And it might take a couple of months to develop. That's another perspective. So in this case, I would say that the next wave and its structure and its character would be extremely critical and extremely important. And this is the final chart for Russell. This is our lovely chart that we've been tracking since January 2020. And this is how it looked then. This was our famous call on January 5th, when we were saying when the index was 1660, and we said that it had a very good chance to drop towards 1200 or even below 1000. This was our target then, January 5th. And you know how it ended. We remember that brutal decline in February, March 2020, when the index ended here in 1966 level. It was amazing call. And another one, this chart was made on January 5th, 2025. Well, it looks like the January 5th is the special day for Russell, or at least for us. When we said that this is done, this candle is bearish, and we were looking for this particular target, 1954, 1643. This is one perspective. And you can see that Russell right now is in the middle of this target. However, something tells that it might not stop here. And if it returns to 966, I wouldn't be very surprised at all. And this is something that we discussed in July, back in July on one panel, and well, we were dismissed at that point, just to say it mildly. But nevertheless, it looks like Russell is on track. Now let's have a look at S&P 500 and what is under the hood here. Let's start with Elliott waves. This is the wave that we've been tracking since January 11th, the same chart, the same targets. We are seeing that it's already getting close to 5,000, wave 4, potentially wave 4, and if S&P 500 gets reversal here, it might move towards wave 5. However, if it breaks below the 18.62, this is where green count would be invalidated, and we would be looking for a purple one, potentially looking towards 3426.50. That would be the next move. Speaking about the short-term frame, this is possible zigzag that we obtained from S&P 500 in red scenario. This is what we were talking about on April 3rd, the most recent chart before this one. And now it's in the target area and has a good chance to make another wave. So I would be considering this as a wave A of a bigger correction, and we would be looking for wave B somewhere here, which could be a flat or a zigzag. At this point, it's a big unknown. That's the perspective on this frame. Speaking about the next perspective. So this is the MACD charts for S&P 500, Nasdaq, Dow Jones, and Russell. As you can see, all of them made bearish crosses, and I would like to say that Russell and Nasdaq recorded these crosses back in March, and the crosses are freshly made for S&P 500 and Dow Jones. If they keep it like this, well, until the end of April, they also will be recorded, and it would mean that this correction is only starting. Now let's have a look at the candles for S&P 500. Everything is bearish at this point, and I would like to say that the very strong bearish closure on the monthly frame, on the weekly, 2-day, and the daily frame. 2-day crossed the 200 periods moving average, which is technically 400 days moving average for this frame. It hasn't been crossed since May 2023, and the last cross was here in April 2022, leading to a very significant bear market for 9 months. Well, let's see what happens this time. This is the candle perspective. Now let's move on to the sectors. This is the weekly closure of major sectors: financial, technology, healthcare, consumer discretionary, industrial staples, utilities, and energy. Every single one is bearish. Well, I'd like to say that most of them are strongly oversold on the daily frames, but not all of them. There is a very good chance that they will continue to move lower. Now let's have a look at the closure of major stocks, the big caps: Microsoft, Amazon, Apple. Every stock here closed with bearish candle, strong bearish candles. Berkshire Hathaway, Tesla. The only one which is kind of bullish is Meta, but it needs a strong confirmation, bullish confirmation next week in order to transform this potential candle into something bullish. So far, everything is bearish. And we will talk about Apple just in a few minutes. And this final one, I'd like to show the perspective for the global indices. A few days ago, I already discussed in the video in the details Australian one and the Nikkei Japan's index. If you're interested in having an overview of the bigger ones that I track, like Nifty, Hang Seng, TSX, FTSE, French, German, and Chinese, just let me know. Say something in the comments and propose what you're looking for, and I'll try to make it happen in the next couple of days. So far, the weekly closure of these indices is bearish, and there is a very good chance that we will see weakness down the road on the global scene. And the final discussion today is Apple. Apple is bearish obviously. A quarterly frame formed an inside down, which is an equivalent of a bearish engulfing, and now we are seeing a continuation candle. The monthly frame, I think it was also strongly bearish, yes, bearish engulfing, and now we are breaking below support lines, approaching the 50 months moving average support line. The weekly is bearish with a good chance for continuation. The daily one is strongly oversold. There is a chance of pulling back. However, I'd like to say that 50 over 200 days moving average cross is going to happen the first thing Monday morning. And it would be a strong resistance here. Even Apple moves upward, it might most likely will get the rejection here and will continue to move down, especially considering huge bearish moves on the monthly and quarterly frames. This is the candle perspective. If we look at the technical one, this is the monthly MACD bearish cross, which happened which Apple recorded in March, and right now it is moving down. So these crosses are not easily convertible into bullish ones, and I would say that Apple has at least a couple of months of bear market before making a move, before making a reversal. Well, if you love statistics, let me know, and I'd like to post a statistical piece on this Apple, trying to evaluate how long and how deep would it be based on some statistics around this cross. Now let's move on to the chart, something that we called back in January. Remember when Apple was 228? Well, we do. And right now it's 188. That's quite a drop. And so far the chart followed nicely. Speaking about the short term, this is a very concerning chart, I would say. First of all, I'd like to emphasize that we called it before, and back in January when we spotted the impulse down from Apple, it was an ABC correction. After that, which we marked potentially as either wave 2 or B, and right now it looks like Apple formed another impulse down, and based on some Fibonacci ratios, this looks like a perfect one for wave 3. Maybe it will go a little lower here. At this point, I don't know, but there is a chance that this is going to be wave 3, and after that we would be looking for wave 4. That's if we try to make a channel here, we might see how it goes here. This is one perspective, and another one could be this one. So we would be looking potentially somewhere here between these two would be end of wave 3, and then we would be looking for wave 4 here. And at this point I'm highly skeptical about putting wave 3 here for multiple reasons. Technical candles and some special signals that I have. Well, if this is going to be an impulse down 1, 2, 3, 4, and obviously 5 somewhere here, that would be an extremely strong and bearish development. And I would like to say that this would be only wave A of a much bigger correction that Apple would be facing. Well, that's the perspective for now. Let's see how Apple develops. This is very concerning. This is very concerning. And now let's wrap it up. So from volatility, septal shift to the dollar's next turn, from yields flashing caution to Apple's hitting center mass, this week's signals are stacking and fast. Are you tracking the move or still reacting to the news? Comment below with your top setup of the week, and don't forget to like this video, to subscribe to join the fastest growing charting community, and share it with your trading crew. Don't let them miss the next reversal. And for multi-frame Elliott waves, candlestick deep dives, and exclusive analytics, head over to investingangles.com. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.